Hello there and welcome to the August 2020 video update for the HI European Market Neutral Fund. I'm Paul Marriage from Tellworth Investments and I run this strategy with my colleague Fred Batwa. Well, it was actually quite a perky month for global markets, which meant that we had a bit of balance on the long book and the short book with winners and losers, and ended up with a month of consolidation and little more. What drove performance this month? Well, it's been interesting. If you look at the long book, it's actually been things that have been pretty good all year. One of the key features of lockdown, as you probably all remember, and let's hope it's in the memory, was how little pollution was everywhere. So we had clearer skies, cleaner air, less noise. And perhaps it's not surprising that green stocks and eco-tech stuff generally have been consistently pretty popular. And I'm sure you're all aware that ESG funds have been taking a lot of money and they've been looking for things to invest in too. So no surprise that things like Solaria and Energia have been another cracking stock for us this month. Ocado as well, the online grocery technology business, that's been another strong one. Again, been really good all year. Another kind of tech winner playing on the change that people are making to their lifestyles. Vestas, the wind turbine manufacturer, another good one for us again this month. So that was kind of the only strong theme in the long book. The rest of it was pretty much balanced out, to be honest. If we look at the short book, generally the shorts were a bit of a challenge because if the market didn't want long-term growth momentum, it decided it wanted value. So it was one of those months really where, one day your short book was doing an okay job, the next day it was taken away from you. So we didn't have a lot of standouts really in the short book overall. One or two things worked quite nicely for us. It was continually quite a good month for some of that. The Rolls-Royce short continued to dribble a bit for us. However, things like Fraport, which have been a pretty good short for us in travel, rose. There was pretty good sentiment about travel and reopening generally. Compass was another short that hurt a bit on reopening. So the short book overall, it was balanced, but it didn't bring an awful lot to the party for us this month. And that's kind of slightly the theme of the month overall, I think. So where do we go from here as we go into the final quarter? I think that there's a kind of two-way pull. The market's become more conscious that the pandemic is kind of here to stay and it's the new normal. I think also globally we're seeing that people are used to the fact that the pandemic isn't really, in global terms, a really big killer, at least for the most economically active people. And it would appear that treatments are getting better. And as countries use different techniques to lock down, local lockdowns and management, I guess best practice is broadly being interpreted globally, which I think means markets are getting used to it. So that's probably a positive for continued economic recovery, and generally that's a positive market driver. I think the negative is that we've travelled a long way already. So having recovered a lot from COVID lows, are we teeing ourselves up for a quieter, tougher period, a bit of correction? And I think that case is quite strong as well. So a bit of balance again there. US elections only going to be noise. I'm not going to go into that, but you can imagine that every geopolitical hotspot type story will be stirred a bit. There'll be views on that. So I can't imagine that's going to create a sort of smooth environment in Q4 at all as we go into the back end of the year with that looming. So it's going to be all about balance again, and I think we've done a reasonably good job this year about balancing out where we want to be long. And we've had a lot of good long-term quality growth momentum technology. But we've also bought in bits of value and recovery, like Accor this month was another good one in hotels. Hotels are here to stay. We're going to carry on using hotels in different shapes or forms. So I think that balance is going to be the key to continuing to deliver for you this year. And we're not going to start changing that strategy at all. I think generally we probably will bring in a bit more value as the year goes on, because generally as markets normalise, I think people will recognise that there are some pretty massive valuation dispersions across global markets. So the same combination of some pretty difficult things to predict, lots of novel market environments that we haven't experienced as fund managers before, but equally with this balanced portfolio and a very broad range of investments, I'm pretty confident that using the tools we've used so far this year, we can continue to deliver a solid year for investors. Thanks again.